Hi class. Today we're going to cover the history and the current state of the accounting profession. We start with the Big Four, which is what we hear about today. These are the Big Four accounting firms, the largest ones in the world. I would note that when I was on your side of the desk, they were called the Big Eight, because there were 8 very large accounting firms, and there was a great deal of consolidation that occurred through the years. Arthur Andersen, of course, went away after Enron closed. They had to close their doors. Ernst & Ernst hadn't always been called Ernst & Ernst. They'd been known as Ernst & Winnie, but nevertheless, they consolidated with Arthur Young to now become the Ernst & Young Company. Price Waterhouse and Coopers & Lybrand consolidated to be Price Waterhouse Coopers. Deloitte Haskins & Sells consolidated with Touche Ross to be Deloitte Touche, now just referred to as Deloitte, and Pete Marwick Mitchell became the KPMG company out of the Amsterdam area of Amstelveen. Now there are also, besides the Big Four companies, there are also a mid-tier or second-tier group of accounting firms. These include BDO, RSM, Grant Thornton, these others. Mazars, of course, is the group that handles the Trump Organization. That's been in the news lately. These may be smaller than the Big Four, but they're still quite large, and they have a significant international presence. For example, they'll have thousands of employees all over the world, or at least in multiple countries. But nevertheless, they typically handle clients who are smaller than the Big Four. After these second-tier firms, we move into the local and regional offices. So this is where we find the vast majority of independent accountants or public accountants, and we find thousands and thousands of accountants who serve local clients and can range from having a few hundred employees in a regional firm with several offices, maybe in several states, to being the sole practitioner. Let's talk about how the standards are set. Basically, what we're going to see is that the U.S. GAAP, which is the generally accepted accounting principles, are overseen and established by 2 main bodies in the United States. Okay, the Financial Accounting Foundation, which we never really hear about, oversees and sponsors the Financial Accounting Standards Board, the FASB, and the Government Accounting Standards Board, the GASB. These are the 2 groups that you really hear about a lot because they're the ones who actually promulgate the standards that accountants must abide by. That said, I would also note that the Government Accounting Standards Board does not promulgate rules and standards for the federal government, only state and local governments, as well as not-for-profit organizations, such as local hospitals, charities, those sorts of things. Then we come to the IFRS, the International Financial Reporting Standards. There is an IFRS Foundation that oversees the International Accounting Standards Board, the IASB. When the IASB promulgates the standards under IFRS, each National Accounting Standards Board that adopts IFRS must decide whether or not they are going to embrace all of the standards promulgated by the IFRS, or the IASB, or if they're going to alter some or add some according to their national needs. For example, when I was in Saudi Arabia, Arabia imposes a religious tax on all Muslims called zakat. And so there is no IASB standard for accounting for zakat, and the Accounting Standards Board for Saudi Arabia had to issue a separate standard to deal with zakat, and how that is imposed on the Muslims in Saudi Arabia, but not on non-Muslims. Let's talk about who the regulatory organizations are. Now, for the U.S. Generally Accepted Accounting Standards, which is what we call GAAP, we have the Financial Accounting Standards Board and the Government Accounting Standards Board, who we just talked about. But also the Internal Revenue Service can impose their own rules on accountants and how accounting must be done. The U.S. Securities and Exchange Commission may also weigh in on these standards, and obviously they regulate the rules that public companies must follow. After the Enron debacle, we found a law that was the Sarbanes-Oxley Act passed in 2002, and lo and behold, part of SOX, which is what it's called, SOX, they established the Public Company Accounting Oversight Board. Now, the PCAOB oversees and regulates or can impose regulations and sanctions on the public accountants that audit publicly traded companies. Again, the PCAOB does not govern the companies themselves, the publicly traded companies, but what they do is they monitor and kind of shepherd the public accountants that audit the publicly traded companies. Big difference there. Obviously, when I say publicly traded, that excludes any privately held or closely held organizations such as the Trump Organization, which is privately held. So the PCAOB doesn't have any jurisdiction over them or their accountants. And then finally, we come to the state boards of public accountancy. Now, in different states, they may be called different things, but nevertheless, they govern the accounting profession. So in Texas, we have the Texas State Board of Public Accountancy that license and monitor the behaviors of CPAs in the state of Texas, or those that present themselves as public accountants or hold themselves out to offer public accounting services. For the International Financial Reporting Standards, that is the IFRS, the International Accounting Standards Board promulgates all the standards, in which we've already talked about in the previous slide. And also you have the Accounting Regulatory Committee, the ARC, which is a group established by the European Commission. So the European Commission provides their comments and recommendations to the ARC, who then passes those on to the IASB for inclusion into the IFRS standards. I would also note that there are no natural laws that govern these rules, okay, these standards, whether we're talking about US GAAP or IFRS. It is simply a matter of people getting together and establishing the rules of reporting, the rules of accounting, and saying, okay, this is how we're going to do it, this is what we're going to allow, and we're not going to allow this. Since there are no natural rules, we have to have standards that everyone understands, and by doing so, we're all on the same page when we understand that we can't have off-book accounting systems, and we can't have, under IFRS, they don't allow LIFO accounting for inventory, whereas that is allowed under US GAAP. I would also point out that at the beginning of this century, there was a, there was an effort between the two governing bodies to converge their standards and try to have one unified set of accounting standards for the whole world. We're still working on that. It was supposed to be done by 2005, and here we are 16 years later, and it's still not done, although there has been a fair amount of movement towards that convergence. We still have some ways to go. Then finally, we have these professional organizations that weigh in and govern different parts of the profession. The American Institute of CPAs has a tremendous voice in the accounting profession. And as part of that, each state has their own society of CPAs. Now, these are not regulatory agencies, but they are tremendous influencers. So we have a Texas society, we'll have a Louisiana society, and each state will have their own society of CPAs to help guide the profession. We have National Association of Accountants, the Government Finance Officers Association, GFOA, and we have the Institute of Management Accountants. Now, the IMA is a private organization that issues the CMA, the Certified Management Accountant Certificate, whereas the states issue CPA licenses. The Institute of Management Accountants issues the CMA license. There are a host of other types of organizations like the IMA that will issue these different certificates. So there's a lot to know about in the accounting profession, and so we will want to at least appreciate how much the accountants are influenced by very, very many people.